Stocks are surging this morning as better than expected July retail sales report, a lower than expected weekly unemployment claims report, and a stronger than expected Walmart earnings report is helping the stock market really surge today. Just a week ago, we had fears of imminent recession, and now just a week later, it looks like we're having a Goldilocks economy. What a change in sentiment. And that's why the market's doing so well today, and why I thought the stock market's intraday lows were last Monday when we had all the fear from the poor July jobs and unemployment report and then the Japan carry trade unwinding. I thought that the lows were in for the summer. Yes, we might trade around in a trading range and trade sideways for a while, but we're not facing an imminent recession based on all this data today. The July retail sales report came in at an increase of 1% month over month compared to 0.4% estimated. And then retail sales ex auto came in at an increase of 0.4% compared to 0.1% estimated. This shows that the consumer is still very strong, and consumer spending takes account into about 70% of the economy and economic growth. So this is good news. Additionally, we had the weekly unemployment and jobless claims number coming out lower than expected at 227,000 compared to 235,000. This is important because this is data on the ground today. And investors were spooked early last week that the July jobs and unemployment report number was lower than expected. But I thought a lot of that was temporary layoffs due to Hurricane Beryl in Texas. And this weekly unemployment claims number and the week before shows that the fact that the weekly unemployment claims number is lower than expected shows that people are getting back into the workforce quickly, and that those layoffs from Hurricane Beryl were in fact temporary. This combined with Walmart posting really strong earnings and raising their outlook for the rest of the year, this goes to show you that the consumer hasn't buckled yet. Yes, consumers might be trading down from luxury and might be putting off travel and home renovations, but they're spending more at Walmart. You could interpret that either way. You could interpret that as consumers trading down because they're scared of the economy, or the fact that they're just spending more in general at Walmart. I'll think of the latter. I think the fact that Walmart's seeing more strength in spending and optimism is a good sign for what's to come. And the fact that they beat on their revenue, earnings per share, and they issued the strong outlook is helping Walmart have a strong day in the market today, up about 7.4% as of this morning. So this is a perfect storm of good news, and this goes to show you that the change of sentiment could be really quick, and why I issued a report and a call last week pretty much saying that I thought the lows were in of this sell-off, and I think that the fears were overblown, and that fears of imminent recession I don't think will materialize. I think the Fed has this under control. And now we're almost seeing a Goldilocks economy and good chances of a 25 basis point interest rate cut by the Fed. That's more likely now due to the strong data than a 50 basis point interest rate cut by the Fed. We also have Raphael Bostic flip and change his stance. Earlier this week, he was saying he would like to see more data before giving an interest rate cut. And now he's saying that it looks like we probably should give a interest rate cut in the September meeting. So this is a perfect storm of good news, and that's why the market's up today, in my opinion.